that the RBI chose to look through the current oil-led inflation shock and maintain rates at 5.25% despite rising its inflation forecast and lowering its growth outlook. How should investors interpret this policy reaction function, and what does it tell us about the relative importance of growth versus inflation in the current cycle?
Right. So if you look at the RBI reaction function, we think investors should interpret RBI's reaction function to be in a wait and watch. That also means that RBI is not in a hurry to hike interest rates. RBI wants to assess the medium term impact of this El Nino, how it really pans out, what's the impact on food prices, what's the impact on inflation, how El Nino affects especially vegetable prices, because we see, remember a couple of years back when there was unseasonal rainfall, it suddenly led to spike in vegetable prices and very, very high inflation. But more than El Nino, it wants to also assess the impact of West Asian conflict. There are news that probably the US and Iran are looking at resolving their differences. So hence, if there is an end of West Asia conflict, probably your inflation will anyways come down and RBI may not have to hike interest rate. Assuming a worst case scenario where the West Asian conflict continues, will RBI hike really to tame inflation or to look at growth? We think it will be a combination of. So while inflation is at 5%, growth is at 6.5%, probably RBI will hike by 50 to 75 basis to ensure that they have sufficient margin in case there is a further disruption on either geopolitical side or on the weather related side in India. So from every perspective, we think RBI is doing the right things. It is going quite steadily. It is taking baby steps. For the last year, of course, they were cutting. This year, what they have done is they changed their policy language. Now they are looking at a neutral policy. Slowly, they may hike, but we should expect hikes at the fang end of the year. So probably 50 to 75 basis hike one can expect in this monetary policy cycle.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.